me see how this rolls over to my big chart. Good morning to the team. Good morning, everyone. All the best to everybody. Happy Monday. Everybody's checking in. Let's see what happens from here. Getting my plans together. As far as my plans are concerned, a couple different joints. For the call, I'm liking the 689.5 as the market attempts to come up to it. Let's get a break over the 689.5 and higher, because above that 689.5, the bulls will retake the month. Let's see what we have. Okay, they already did. No, that's one color. Hold on. Okay. At the 689.5, the bulls retake the month. So that's what I'm looking at there. That's why I like that. Also, you want to be careful because it could be some rejection here as we come right up on it first thing this morning. 689.5 area. Right where we are right now. The 689.5. I'm going to see if we can get a break and retest of that area and stay in that control buying algo. See if we can get a break and retest at a 689.5, stay in that control buying algo, and get in a call. Looking at a 689.5 entry, looking at a 692 profit target, looking at a 694 profit target for the call. This is what I like for the call. And we're there now in that area right now, Monday morning. First 5 minutes, very volatile. First 15 minutes can trick you. I will wait. Even if I miss a trade, I'll wait. I have no problem missing the trade, but I do have a problem breaking my rules. I do have a problem trying to trade early. There's no sense in it. Let's let the market set itself up. That's what I like for a call. For a put, we got to come back down below that 685.8. I need to see a break and retest at that 685.8. Okay. Putting us on the other side of the fair market value. And then coming down from the 685, possibly towards the 681s and the 682. So I'm looking at 685 strike, 684 entry. I don't like none of that for real right now. She's so high up at 689 to drop $5. I'm taking this out. For the daily anyway, because she could give us an opportunity right here at the 695. If she rejects, she could give us an opportunity at the 695. I'm sorry, at the 690. If she rejects, she could give us an opportunity at the 690. And if she does do that, reject us at the 690, I believe she'll come back right down to where she started, to the 684. down to the 685, 6, say 685, 6, yeah, 685, 6, let's stick with the plan, 685, 6. Going higher. Okay, give me that 687, 5. Okay, just redid that right in front of your face. Alrighty, it's going to be very interesting here at the 689.5 area. If we can get over it, break and retest, I'd love to get in a call from that 689, taking that all the way to the 692 to 694. If we drop from here, I'm looking to get in a put with a break and a retest of this area, possibly that 687.5, and taking that down to the 685.6, 684. So that is what I'm thinking right now. I need to fix this. Alright, this is what I'm thinking right here. This is what I'm looking at right here. Again, looking at a 689 break and retest for a call. I'm looking for a failure. Looking to get in around that 687. I still didn't put it right. It needs to be higher. Still didn't put it right. To the 684. So I'm looking at here around that 687. If I can get that. Come back. Bam. That is what I would like to see right there. Alrighty. I got that together now. Now let's see how that looks on the big chart. Let me look again one more time. Okay, 689.5 break and retest. We'll take it on up to the 692 to 694. 687.5 break and retest in this area per se, Your Honor. And we can take that down to the 685 and then the 684. I'm saying 684. Let's say 683.5, really. 680. 680. I'm saying 684. Yeah, I like it. I'm gonna keep it at 684. All right, let's see what this looks like on the big chart now. We can already see that apparently at that 680 9.5. We touched it, but the bull stepped right back in. That's why I also have this controlled selling algo here in purple, ready to get active. Let me go ahead and highlight it, because there is a possibility that the selling algo could get active as well. Okay? We'll come back to that. That's what the plans look like on the trading view chart, using my arrows as a guide. Dang, got it. Look at that rejection. Oh my goodness, I should have been in this trade already. Oh. Perfect entry right here. 3 candle setup right out of the playbook. Doggone it. Beautiful 3 candle setup right out of the playbook. When I was making the plans, I got to the chart a little late today, and it's backfiring on me. Not having my plans already ready by the time market opened. The exact area I wanted to get in for a put has already popped up and come to that area, but it rose. That upset me a little bit, I ain't gonna lie. I'm only human. That got me a little bit. Yeah, that got me a little bit. Damn! I hope somebody from the team was able to catch that as I was calling it out. I hope you are already ready to execute that trade. I will have to be patient and wait for another setup, which I have no problem doing, because I know that the market will always give us opportunities. I'm just more so frustrated with myself not being ready to execute. Wanted to grow on. My mind was telling me, well, it's Monday. So nothing's going to happen too soon, but that's a lie. We're not here to predict the market, guys. We're here to react to what the market does. We're here to react, not predict. We're not here to prove that we're smart. We're here to make money. The market does not pay you for being smart. The market pays you for execution. And you have to be ready to execute when the opportunity presents itself. And unfortunately, I was not ready. I was not ready. Getting my other charts together, and now I will view my plans and draw up any algos that are present as well. That was just a thing of beauty right there. We called out that potential rejection, and see, that's why I needed to make those plans early, because you saw me change my plans for the put. Completely change my plans for the put. Break and retest of this area. I would love to get in a put for the break and retest. We're going to be patient. It's Monday. It's early. Just happy the market is moving. As long as the market is moving, it will present an opportunity for us to make profits. That's all we can ask for. Is the opportunity. It is up to us to seize the opportunity when it presents itself. That was a sweep area. That's exactly why I did that too. Yeah, buddy. Yeah, I did that to myself. Did that to myself. Did that to myself. Not a problem. I'm dragging just a little bit, as you guys know. It's the blessed month of Ramadan, so I am fasting, so I'm not as sharp. So I got up early, then I laid back down. Then I was reviewing something that I potentially want to, point out to the team. The review took a little longer, but I told myself, well, it's Monday. But nonetheless, let us get ready for the next opportunity that presents itself. Show one right there, though. I'm gonna shout out the team here in a quick second. Shout out to those of you joining us on Kick as well. Okay. Alrighty, let's look at my plans now to blow this up. Okay. This was just a beautiful trade right out of the playbook from 689.5 down to 687.5. 3 candle reversal. Just beautiful. Just beautiful. 5 minutes is all you needed. Entry, exit right at the 687.4. Bam, bam. That's all you would have needed. That's all you would have needed. It's right there. Let's see what's going to happen here now. See if we get a close underneath this area, because this is where I wanted to get in now as I'm looking at my plans. I called this 687.5. That's where we're at right now. I believe we can take that 687.5 down to 685.6, possibly 684. But just like what happened at the 689.5, at the 687, I want to see if we get a break and a retest. We don't just want to jump at it, because if you did, you just would have jumped in that call. You would have got snatched right back. If you would have just jumped into a put right here, you would have got snatched right back. Let's give the market just a little bit more time on a Monday, but be happy that the market is moving. And also coming back to the TradingView algo, you can start to see that controlled selling algo possibly getting ready to form. So even more reason why I want to wait till 10 o'clock right now. Not for confirmation, but for continuation, and that is what we're looking for. I am going to reset my alarm at the 689.5 for the call. Knock back on that door again. I shall be ready to answer. The put. I just want to retest this area. I don't want to jump. I'm getting more and more frustrated. Gosh almighty. That's the area again I'm missing out on. 685.7 entry. She's already down now to 686. Hopefully we get a retest. Potentially. Look like she's trying to retest now. And I'm almost ready to execute. And I still like it though, because sometimes you're gonna have those clear opportunities where you have to trade because what the market shows you. You know what I'm saying? When the setup comes, the setup is there. It's your duty and responsibility to take that trade. This is out of the playbook. So regardless of the plans that I have made, I plan the market plans too. My job is to follow the market, not try to prove that I'm right. Again, glad I didn't chase this area at the 687.5 where I want to actually get in, because I'm looking for a break and retest. So patience is pain. Yes, I missed out on a nice trade, no problem. Missing a trade is fine, but messing up and not following your discipline will never be okay. So all I'm going to do now is just reset my alarm in this area as well. And continue to be patient. Now my alarms are set for my desired interest for the call, desired interest for the put. Here it is on the trading view chart. That's 687.5 below, break and retest in for a put. That's 689.5 break and retest above for a call. Right now we're stuck in the middle, and the middle is no bueno. The middle is no bueno. Beautiful retest. Eight minutes to that 10 o'clock candle. What? Now that's what you call a nice break and retest. That was simply marvelous. Simply marvelous. She has to continue along this path before I get involved. Alrighty. Okay, I got everything set up here. Again, continuing to hold. Let's let the next candle form. Let's let the next candle form. Continuing to be patient. Alrighty, 9:55 is upon us. I'm continuing to be patient. I'm gonna wait even 5 more. Gonna wait. Gonna wait 5 more minutes. I don't know. I don't know, buddy. Yep. I gotta wait. So I'm gonna wait. Let me take my eyes off this chart and holler at the team real quick. Shout out to the team real quick, man. Let me take my eyes off of this chart for a second and holler at the team real quick. Big shout out to those of you joining us on Kick. So grateful for what we're doing on Kick, seeing our numbers are growing on Kick, and that is beautiful. We're doing a lot. Oh, I'm human, man. I am human. I'm human. I'm human. I'm human. That means that I will miss trades. Because I'm human. But I will not sacrifice my discipline. Give a shout out to the team real quick who's in the building. Todd Macon. And Kosi is in the building this morning. Big Ben is in the building. Jared Lewis is in the building. Quiet Soul is in the building. Oh, shit. Oh, Brooks Sanchez is in the building. Yes, sir. Brooks Sanchez is in the building. Yes, sir. Man, where you been, man? Yes, sir. Brooks Sanchez. Yes, sir. I had to pull out the Price is Right. I feel like we all just won. But you coming back, buddy? What do you say, my bro? Apologize, I've been missing for a little. It's a personal thing I take care of. Hopefully everybody is trading safely. I'm always here, though. Yes, sir. Glad you are back, buddy. Whew. Yes, sir. The team is here. Jesse saying, good morning, fam. Miss y'all a lot. Give you a sound check. Good now. Welcome back, Brooks. Working through out the gate, right? It bounced off the 5-minute box. It's inside. Happened fast. Your edges correspond to the 5-minute opening range. My goal is not to get snatched back. Man, here we go, man. Here we go. Going for that much larger time frame. I mean, the trade, I should have already been in the trade, you know. It just is what it is. But I'm not complaining, and I will just look for another opportunity if one presents itself. Just that simple. We don't do no chase around here. Oh, on it. But it does hurt a little bit. I cannot tell a lie. This is disgusting right now for me, but I cannot tell a lie. That control selling algo that I pointed out to you on that trading view chart earlier that could potentially show up. We knew it could potentially show up. We already knew that. 10 o'clock candle on us right now. What are we gonna do? What are we gonna do? Well, I'm at a disposition as she is going right on. I'm just not going to chase. The retest came around 9:45, 9:55, and with the 10 o'clock candle coming in, I didn't want to chase that put. I wanted to wait until the 10 o'clock candle came, so I actually missed that 687.5 retest entry that it would have given me. I'm okay with that. I had to weigh the fact that, do I want to take the 685 entry, or do I want to wait for that next 15-minute? You know, this, I'm talking right here, 950 is when it happened. 950 gave me the retest. After the retest, the next candle was 955, my entry candle. But at 955, that's so close to 10 o'clock, I said I just got to wait till 10 o'clock because that's the larger frame, the larger time frame. That's what I went off of. And as you can see right now, I made the right choice, not chasing. The discipline, man. The discipline is going to pay every time. When you're not afraid to miss a trade because you want to stand on that discipline, that is what is going to make you a successful trader. Having a set of rules, a set of principles, knowing that, accepting your fault, as I first said, if I would have been ready like I normally am at market open, I would have already been done. I would have caught this 3-candle reversal. Beautiful. I would have caught this 3-candle reversal straight out of the playbook. 5-minute trade, done, over with on a Monday. Okay, from the at the very least the 689. Okay, if you wait until the till those bulls got crushed here in that tail, the 689 down to the 687.5. Okay, that's plenty enough money right there. $1.50 move. Okay. But again, I'm not chasing, I am letting. I'm just grateful that the market is moving. As long as it is moving, it can present opportunities. And then also at the 950, another reason why I didn't get in then is because, as I always tell you guys, first 5 minutes, very volatile. Within the first 15 minutes, it can trick you. Have you thinking the market is going one way and then completely going in a completely different direction. So we have to let the market form. So for those of you who caught that quick scalp, shout out to you. For those of you that are remaining patient, shout out to you as well. And if I'm being even more transparent, Ben, the reason I didn't get in because I was emotional about it. And that was just not wise. It doesn't mean that I didn't mess up. It just meant that even though I missed that first trade, I wasn't going to follow it up by chasing. And that would have worked out as well. The 688, 687.5 entry. First profit target 685.6. 685.6 just hit as well. What can you do? Stick your hand out. That's what you get, Abdul. You wasn't ready this morning. Doggone it, man. $2 drop. $2 drop just off the move that I called. Not out of what was presented. Imagine getting in at the 690. The 689. And holding down right here now to the 685. I called at 687. The markers gave us an opportunity at 689. I did not trade well this morning, all due to the fact that I was not prepared at market open. At market open, I was still making and adjusting my plans. Bam, look at that. Right into that control selling algo that we talked about, right at the 680, right at the 685.6, getting a little bounce here. Potentially going lower. Second profit target that was called out this morning is 684. Second profit target 684. This is one of those times where I would go walk it off. Because I'm fasting, if I walked it off, I'd probably get hungry. I gotta conserve that energy. Can't just drop down and do 10 push-ups right now. Gotta conserve that energy. All right, Jesse said on the edge of his seat. Big Ben said emotions will screw us up and make us do things. Just took a little paper cut, Ben said. Yes, sir. Yeah, all I could do is watch the party happen. I'm on the outside looking at the window, seeing everybody in there dancing, having a good time. Everybody's in there having a good time at the bank today, buddy. It's a party at the bank right now this morning. If you were in an early put. The beautiful thing about it, we still have many hours left in the day. So now, what am I going to do now? Well, what I'm going to do now is start looking at the quarter marks. 10:15, 10:30, 10:45. This is ridiculous. She's gone. Yes, sir. This is one to grow on. And that, as long as we learn a lesson from it, be prepared. The market is not going to wait for you. Second opportunity. Does anybody else have any plans they would like to share? Please feel free. Put them in the chat. Well, let's see what the news is talking about. Dollar falls on tariff uncertainty. Yep. S&P falls on tariff questions. What is going on with the tariffs? Got to keep the news up because the market responds to the news. Thank you, Jared. Doing the best I can with what I have, Jared. Knowing that discipline is the key. The market will always present opportunities, but if we don't have discipline, the opportunities do not mean anything. And that discipline also means in correcting ourselves when we make mistakes, when we do not perform at our best. All I can do is just wait, guys. What are you guys thinking? Is anybody still in this put? If anybody is still in it, man, do I salute you. Look at that right there. right in that beautiful controlled selling algo. Matter of fact, we can now go ahead and switch up a little bit and lighten up this call that we was looking for, because this did not take place today. Okay, which is why we have plans for both directions, because we do not predict, we just prepare, and then we respond to whatever the market does. If the market wants to go up, we got something for that. If the market wants to go down, we have something for that as well. Not how I planned on starting my Monday off. Anybody have any thoughts? Brooks said not yet, still standing on his hands or sitting there. I can dig it. Anybody else have any thoughts, any plans? I've already missed this put, so there's no way I can re-enter this put unless she really bounces back and puts in a lower high. Other than that, possible maybe at the monthly support, which is that purple line on the chart. That's monthly support. I don't know. Looking for liquidity sweep. Yeah, we had one right there at the 689.5. Big one right out this morning. As the market liquidity swept last week's high, went right there close to that 690. Hit that, boom, came right on down. Missed that all the way around. He said he waited on that 1030 candle. All right, thank you, Nkosi. Nkosi waiting on the 1030 candle. Jesse said he's looking for liquidity sweep. Thank you, team. Brooks said he's sitting on his hands. I'm talking to y'all. See what happens. Dow drops 600 points as confusion grows after Trump hikes global U.S. tariffs. Interesting. Wonder what MSNBC has to say about this morning. Let us take a listen.
saw for the Maduro ouster, and the state of negotiations between the U.S. and Iran. Iranians are not, if they're going to give Trump anything close to what he has demanded, both on the no enrichment and uranium stockpiling point, and they're not even willing to negotiate on issues like ballistic missiles that the Israelis have said is utterly critical, and Israel would be a part of, I think, any strikes together with the United States going forward. Plus, Trump has already had experience militarily with the Iranians in a couple of occasions, both the 12-day war last year as well as the assassination of Qasem Soleimani at the end of his first term in office. And in both cases, Iran's willingness to hit the Americans back was negligible. So here, I think you see a willingness, a strong willingness on the part of Trump himself. It's not being driven by Marco Rubio, not by Stephen Miller. It's the president who believes that he should be hitting Iran hard. And he's made that pretty clear publicly.
Yeah. I'm just curious what your thoughts are about regime change as we continue to get more detailed reports of the widespread killing that the regime undertook in those days during and right after, of course, the protests.
Well, Trump did say he was going to rescue the Iranian people, and it's hard to believe that that is the principal motivating force that is driving the president. In the same way that democracy in Venezuela is of interest to a lot of Trump voters, but it isn't necessarily of interest to Trump himself. I don't think that's the issue here. I think the issue is more, are the Iranians prepared to capitulate on the things that Trump wants? And that's the nuclear program, the ballistic missile program, the end of support for proxies across the region, and the like. The Trump administration does believe that tens of thousands of Iranian civilians were brutally killed in the demonstrations that we saw earlier in the year. But the immediate reaction of the United States to that was not very much, frankly. So that's not the issue. I think the question is whether or not the United States will engage in smaller scale military strikes against, for example, the Basij, the paramilitary forces that are actually directly involved in a lot of these attacks against civilians and taking out some missile programs and the like, or are they going to try to engage in a decapitation strike directly against the leadership and the supreme leader? That is being actively discussed. President Trump has not given a go-ahead at this point. And it wouldn't surprise me at all, as we've seen some of the reporting over the past 24 hours, if we see a somewhat more limited first set of strikes to see if that changes the Iranian negotiating position. Do they capitulate? After all, the Americans don't need to go all in at once. The timing is very much on President Trump's decision. It's not really up to the Iranians here.
Okay, Ian, thank you for joining us. Didn't even get to bring up Mexico, which was another sort of crazy story. We were following the violence there.
Well, your World Cup tickets for Guadalajara are probably a little less expensive.
What are they going to do? I mean, don't they have 4 matches there?
Well, they did. Let's see if they still do. I mean, I wouldn't be going there right now, and I'm generally not someone who worries about this stuff. But that airport scene over the weekend did not look very conducive to tourist travel.
Yeah, it's a disaster. Okay, thank you, Ian Bremmer.
I'm supposed to go.
Did you just cancel your
2
trip?
weeks. I'm literally supposed to go right now.
I don't think I would go. Yeah, it's a popular tourist destination.
Yeah, we're going.
Beautiful, West Coast.
I mean, the flights were not landing. They were turning around yesterday.
Know.
Shelter in place from U.S. State Department doesn't sound like a good vacation.
In Peru a few years ago. I don't know. Don't go where I'm going. Something.
Still to come today, the CEO of a supply chain and logistics company, Flexport, on how Fortune 500 companies are aiming to get refunds from these now struck down tariffs. Gold prices are up today, trading back not quite to record levels. We'll talk to Rockefeller's Ruchir Sharma about what's driving this latest push. And snow burying much of the Northeast today. We'll talk about the fallout for travel and beyond as Squawk on the Street comes back.
Alrighty, Nkosi is saying State of the Union tomorrow, NVIDIA earnings Wednesday. Both will have some effect on the market. In his opinion, Jesse Swanson said the market has his attention right now, but does not have his money. So he is actively looking, waiting, and anticipating a potential opportunity. big shout out to the team for that. I'm going to go ahead and leave this view up. For those of you who didn't notice, I got rid of pre-market. So now we're looking at Friday's action and today's action as we approach Friday's lows. At 684, I called out for a second profit target. The alarm is at 683.9. As we are now at 684.4. Again, nothing is exact. Everything is areas and probabilities. But if you look at this. Yeah, I'm looking at Friday's low. Definitely lower. So that's what we have up there. Just wanted to point that out to the team.
Minutes here into the hour. Here are three big movers we're watching. Domino's Pizza seeing gains after better than expected U.S. sales growth alongside a dividend raise. As we mentioned earlier, software stocks getting slammed again to start the week. Names like AppLovin, DocuSign, Salesforce all getting hit hard right now. And then watching shares of Netflix today, President Trump calling on the company to fire board member and former Biden administration official Susan Rice for, quote, pay the consequences. On a podcast last week, Rice said things wouldn't end well for companies, news organizations, and law firms that caved to President Trump's demands in his second term. A Netflix spokesperson declining to comment on the president's remarks. Does this hurt their chances to win the Warner Brothers deal?
Unclear. We have been focused, as I think is properly so, on the antitrust examination of Netflix's agreement to acquire Warner Brothers. Certainly it's an area of focus for Paramount to try to argue that the board should take more seriously the ongoing investigation of the antitrust implications by the Department of Justice. But you tell me, Sarah, how involved the president wants to get in this. It had been perceived initially that he would be favorable towards the Ellisons, given a long friendship apparently with Larry Ellison, and therefore for Paramount. And then he's come out and said, well, I'm not going to weigh in one way or the other. But obviously he
does Warner not want to sell to the Ellisons because of politics?
The people there would say no, that is not the case.
Because do you have like liberal company versus conservative company? Is that what's happening here?
I don't believe that is the case. And the key asset in sort of that perception might be CNN, which is going to remain, that's sort of the question. Obviously, the Netflix deal remains outside of Netflix in its own company. With Paramount, it would be consolidated with CBS. But whether or not, I don't know if that's a conversation going on in certain circles.
No, I was just curious because, we constantly sit here and say what Warner always chooses Netflix. Warner always chooses Netflix.
Well,
they don't seem to want to do a deal.
This time it's very much unclear to me that will be the case. I think, as I reported earlier, the engagement from what I'm hearing during the 7-day waiver period between Paramount and Warner Brothers has been constructive, I'm told. And at least perhaps noting a notable or positive change in the board's posture. We will see what that results in. And if in fact you want to make a decision based on whatever happens, if it continues to be in Netflix's favor, perhaps do so. But let's wait and see what this board chooses to do. If, as I expect, Paramount has increased its offer, but it's not just about price; it is about certainty.
And antitrust certainty plays in here, and then we get back to Susan Rice.
Yeah, well, we really should just get back to the actual questions around whether or not this does preclude competitors and or represent a significant threat.
Right.
That's what we should be getting back to. In any other administration, that is what we would certainly expect would be the case.
You don't think other presidents ever?
Are you aware of any that have
I don't
ever
know.
called for a board member to resign from a company?
No, but I'm saying, do other presidents get involved sort of high level around antitrust decisions?
Not that I'm aware of to the extent that this president has.
I know they're not supposed to.
Right, no.
Right. Okay.
All right.
Now we talk about the blizzard.
Oh yeah, the blizzard. Let's get an update on that. It's still snowing outside. Contessa Brewer has the latest for us. Contessa.
I mean, that's the understatement of the century. It's still snowing outside. It's like microdermabrasion for free in your face when you're walking to work. But look, 40 million of us out there dealing with this blizzard from Maryland to Maine. Everybody under blizzard warnings today. This is a winter storm that has dumped so far as much as 2 feet of snow on parts of the eastern seaboard. As you might imagine, all of that snow snarls travel. FlightAware is reporting more than 5,000 canceled flights today, including hundreds at JFK, Newark, Boston Logan, Philadelphia International. And in New Jersey, the governor has now extended a travel ban until at least noon today because of the hazardous conditions, really demanding that drivers stay off the roads because the crews need to be out there plowing and salting and just doing their jobs. New Jersey Transit also suspended all rail, bus, light rail, and Access Link services until further notice. And hundreds of thousands of people don't have power right now. That's according to poweroutage.us. It's reporting nearly 240,000 customers don't have electricity in Massachusetts, following more than 135,000 in New Jersey and roughly 75,000 in Delaware. We're going to keep an eye on all of this for you. But guys, how different is this that I get to report on the blizzard from inside the New York Stock Exchange instead of standing out in it as I have for so many years, Carl?
I don't know. I always liked live shots in the weather.
Yeah, because you weren't doing them. You like it when I'm out there doing them.
Fair enough. Contessa, thanks. In a moment, Rockefeller's Ruchir Sharma with his take on the tariff turbulence and why he says gold is entering its so-called storybook era. We'll talk to one company whose tariff refund calculator going viral and seeing pickup from lots of Fortune 500 companies in a minute.
Yes, sir, team. Cozy said looking for a reversal. I said I'm looking for a potential reversal around that 683.5 area because that is monthly support. So if we are able to get there, great. We did get down to the 684.1. It's close enough. 684.1. Again, nothing is exact. Everything is probabilities. Everything is areas. And I believe we did a good job to the best of our ability getting there. Does anybody have anything they want to share right now? Please feel free to let us know. Oh. The plans worked great. I did not. Put the plans together right here in front of the team. Called them out. It was just too little too late. 687.5's entry all the way down to the 684. Beautiful, 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 beautiful. $2.50 there. The market gave us an entry at 689. So imagine from the 689 to the 684, $5 move. Oh man, boy. Crazy, crazy.
Welcome back. Stocks, you see, under some pressure this morning. Gold moving higher yet again, firmly above $5,000 an ounce, and it is up more than 75% just over the last year. Our next guest says gold is now divorced from fundamentals, but it's hard to see what might stop its ascent. Joining us now is Rockefeller International Chairman and Breakout Capital founder Ashir Sharma. Good to have you. I guess let's start on gold, since I introduced you that way. As we continue to watch its ascent, what do you make of it, and when does it stop?
Yeah, David, that's the point, which is that I've been quite bullish on gold for many years, but what I have to admit, given the parabolic price action of the last few months, is that it is totally disconnected from any fundamental story, which is that what drove gold historically? There were factors such as real interest rates, inflation surprises, and also of late, since 2023, central bank purchases looking to diversify outside of the US dollar. All those factors have slowed down or can't explain what's happened to the price of gold over the past few months. It's being driven entirely by financial flows with massive ETF buying that's going on. And people are coming up with all sorts of stories to say why gold should be going up. For some people, it's dollar debasement. Other people, it's the US deficit. Other people, it's the uncertainty unleashed by the Trump administration. And yet what's unique about gold is that all other assets don't reflect any of this kind of risk premium. That if you look at US bond yields, they're relatively stable. The dollar has also been stable last few months. And also the fact that Bitcoin, which was seen as this big alternative to the US dollar, that's been tanking. So this is a very unique phenomenon. And it just is one of those things, which is we saw this in the late 1970s as well, that beyond a point, these momentum trades just get so powerful that they keep going, and people keep coming up with all individual stories to justify the prices. So I think even here that gold keeps going until you have a catalyst in the other direction. In the late 1970s, it was interest rates that finally broke the back of the gold rally when you got a massive increase in real interest rates. I just don't see that happening. So we're caught in this sort of very strange situation with no fundamental backing to the price of gold, but yet nothing to stop its momentum.
Yeah, you mentioned interesting the corollary or negative correlation between gold and Bitcoin, which is not what Bitcoin fans want to see, since for how many years did we hear it was digital gold? It doesn't seem like it's behaving that way.
Yeah, exactly. So I think that this has become very unique to gold, but yeah, it's spreading to other commodities though. So I think that one thing which I've been telling some of our clients as well is to diversify by buying other commodities, which is that usually when gold does well, it tends to drag other commodities out. So I would spread the love a bit by buying other commodities in a portfolio and increasing the commodity allocation. But I understand that gold, still seems like the risk is to the upside rather than the downside from here, at least in the near term.
The other weird thing is that usually when gold goes up so much, the dollar goes down, and you buy gold as an alternative to the dollar, as you mentioned, worried about deficits, worried about diversification and geopolitics. Dollar's kind of stabilized. I know it's weaker over the past year, but it hasn't really done much this year. And if you look at a long-term chart, it was coming from very high levels. So is it really a reflection of concerns about the dollar?
No, it's not. That's my point, Sarah, which is that all these fundamental explanations do not match up to the narrative about gold. The dollar debasement that people love talking about, it's not reflected, in other things, Bitcoin included, or the dollar against other currencies, or even US bond yields. Now, those are legitimate fears. Even I'm concerned about the US deficit and how long they can keep running that. But the fact of the matter is that objectively, it's not reflected in other assets. So therefore, the title of my piece, that we are in this sort of storybook stage where you can come up with whatever story you want to justify gold's ascent, but there is no fundamental factor to pin it down to.
Of course, cover of Barron's over the weekend was titled "Dollar in Decline," and they talked about approaching this level down, as they said, about 10% off the highs. They argue that it's not really a doomsday scenario for stocks, though. Ruchir, would you agree?
Yeah, I think that if you look at the dollar's bear markets, Carl, that in the 2000s, I think is very instructive, that the dollar had a big decline in the 2000s, but the S&P went up between '03 to '07. I think what the dollar's underperformance does signify is this diversification to international assets. So yeah, I think that there is very little evidence as yet to suggest that we're entering some stage of de-dollarization, which is going to lead to the dollar being annihilated. I don't think that we are anywhere close to that. But it's instructive to remember that there are enough periods in history when the dollar has declined, stocks have done okay, but generally it's international stocks that have outperformed in that environment. I think that's the sort of regime we are currently looking at.
Ruchir, thank you as always. Appreciate it.
Great. Thanks, Dave.
Still ahead, we'll get a read on how companies are navigating the tariff chaos with the CEO of one of the country's biggest supply chain players, Flexport. But first, Novo Nordisk shares tumbling on new data out of a key trial. We'll tell you the details when we come right back. Stock down almost 15.5%.
Novo Nordisk shares are down in a kind of a rough tape. The company says its next-gen weight loss drug did not achieve its primary target when compared to Lilly's rival drug. That was after 84 weeks. Annika Kim Constantino joins us on the newsline to help break things down. We had a discussion this morning, Annika, about how the difference between the numbers isn't dramatic, but it's still another loss to Lilly.
That's right, Carl. So in this case, that small difference is a big deal because Novo was positioning this drug to be more effective than anything on the market right now, including Zepbound. And we have to remember that Zepbound's higher efficacy is the reason why it's been able to win more market share than Wegovy in the first place and become the preferred obesity treatment among doctors. So this drug was supposed to be Novo's answer to Zepbound, but this trial, again, shows that Zepbound is indeed superior in terms of weight loss here. And so BMO analysts today said that they really struggled to see a reason for patients to want to take Novo's drug if Zepbound is available. And doctors will be likely to be less inclined to prescribe Novo's drug if it can't really offer anything better. So that really puts the sales potential of this product into question and isn't great for Novo's odds of winning back market share here.
Although we've been talking about how market share works in this new TAM, is it common for one to start on one version of a med and switch to another brand?
Yeah, it really depends on the patient experience. You know, some patients may not respond to just taking Zepbound alone or Wegovy alone, which only targets GLP-1 versus Zepbound targeting 2 hormones. So it really depends on that patient. And there are patients that may want to switch from injections to taking something more convenient like the pill. And so it's unlikely that patients that are already taking something like Zepbound could switch to something like Novo's new drug here.
Okay, Annika, thank you for joining us. Weighing in on what's going on with Novo shares, which are plummeting right now.
Beautiful,
a key question looming after Friday's Supreme Court decision: who gets tariff refunds and how? Flexport CEO Ryan Peterson joins us next as his company's refund calculator goes viral. We'll be right back.
Also want to let you guys know I did get in a call here at this monthly area of support. I did get in a call here at this monthly area of support. Full transparency. I'm gonna call here. See if I can take it back to the 686. 683.8 to the 686. Lovely if it worked out. Again, waited till we reach this monthly area of support. Taking my call here. If we fail this monthly area of support and continue going down, then I'll get out. But for now, I'm going to go ahead and be patient and allow the trade to work itself out, potentially. I've done my job. I've said it. Now I'm just going to go ahead and let it. Thank you guys for tuning in. I do appreciate you. And while I do have your attention, I want to give a special shout out to one of our sponsors, Reset with Dr. J. If you're trying to lose weight, you do not need another diet. You actually need to reset your metabolism. This full body reset, go to resetwithdrj.com, has been phenomenal. I'm just going to skip straight down to the before and after pictures. Many success stories already. 5 weeks into this full body reset, Amanda is seeing great results. Unbelievable results. Natural, she's lost 17 pounds in 5 weeks. Cindy, look at Cindy. Look at her face. How she looks 5 weeks later after the reset. She says, I'm not starving. I'm not
Dow's now
tired.
down almost
I'm
700
approaching
points, almost
better.
1.25%, almost
Five,
1.5%
we've
now.
already lost
We've got to
20
dig into what
pounds.
banks are doing
Tons of
today. Down
information.
3% for the
Look
sector
like a
overall.
different person.
We thought this morning it
Again,
might be a story about
this
private
person
credit,
buying
Aries,
Joe.
and Blue
Lost
Owl
23 pounds
with
in a month.
Blue Owl
Go
with a
to
fresh low. But take a look at some of the credit card issuers. Amex with an almost 8% move is not very common. Visa, MasterCard with some similar pain. Guys, we'll watch that closely. I'm not sure if it's on news or more macro concerns about the high end or employment or what.
Yeah, I mean, I was hearing a thesis last week on Amex that may have been making the rounds that, well, loss of white-collar jobs means fewer people conceivably who are going to be eligible for the credit cards or spending. It seems a little bit in the future to imagine that, but I'm not quite sure what else might be.
If you look at some of the other biggest losers today in the consumer discretionary space, there are a lot of them that are tied to the high-income consumer. Wynn Resorts is down 7%. Ralph Lauren is at the bottom of the list as well, down 6% right now.
Delta down 4.
So there might be a high-end spending story making the rounds.
I mean, the market discounts things well in advance, I guess.
Yeah, well, that's the AI trade.
We've seen a lack of hiring, but we really haven't seen the loss of white-collar jobs. It is certainly a key fear of those who believe that AI is moving very quickly and the agents will ultimately really.
It's fear, it's anecdotal. It's not showing up in
jobs.
jobless claims. I mean, those continue to be very low on a weekly basis, but we'll watch it. Meantime, refunds in focus for many U.S. businesses after the Supreme Court struck down President Trump's IEEPA tariff last week. But there's plenty of uncertainty in how and when they will get their money back. Our next guest, supply chain firm, created a tariff refund calculator for these companies. I remember mentioning it during our breaking news coverage last week. Joining us first on CNBC is Ryan Peterson, founder and CEO of Flexport. So Ryan, talk about what this calculator actually does and how much interest you've seen.
Yeah, hi there. Yeah, so Flexport, we're a licensed customs brokerage built around technology. So that's the first thing we've been doing for the last few weeks. Really, actually, been building this for over a month, just in case this day happened, was have this calculator that lets you upload your customs data, which you can get from the government. They'll give it to you. You just have to sign up at Customs Portal, give it to us, and then we'll show you exactly how much money you would be owed if there were to be refunds, which I have reasonable conviction there will be refunds. And on Friday, we had 22 Fortune 500 companies sign up for this service. So I think you're going to see a lot of demand. I mean, it's over $100 billion worth of refunds that people are potentially owed. Let's see how the process plays out.
And it just spits out a number for those companies that sign up and tells them what they're owed?
Yeah, it just instantly just tells you exactly how much you'd be owed. And it's not that hard to do because we have all the data. We can see exactly which line items would be refunded, et cetera. So we've been building technology in this area for a decade.
What kind of numbers are you looking at for a small business, for instance, versus a large business?
Well, you're going to see up to, like I said, $100 billion is what's owed to American business as a whole. And yeah, any given company, I mean, we've got a mid-sized clothing company that I looked at last week, $70 million of refund. They're not like a big world famous brand or anything. So it's huge money. CFOs really care about this.
I'm gonna hold off.
We're seeing as much interest from the CFO as from the trade compliance department.
On the 30-minute.
What about navigating now the current tariff environment, or what may be? I mean, I would assume it's hard to keep track of. You're not paying your IEEPA tariffs anymore, but you're going to have to still pay the 15%. I don't know. Tell me what you're seeing, Ryan.
Well, it's incredible. The president has a lot of levers to keep putting in new tariffs and change the environment, and that's the hard part, is keeping on top of this. Even that 15% that he introduced over the weekend actually hasn't hit the law yet. Technically, it's still 10%. We're waiting for, we don't respond to Truth Social posts in our tariff simulator calculation. We're waiting for officials. So just keeping on track of, based on what date it was, what duty was prevailing on that date. And for that, we have a tariff simulator. All these tools are, by the way, free. Just go to tariffs.flexport.com. You can use them. And so just stay on top of this. It's going to be even more complex. They are not happy. The administration is not happy to lose IEEPA, obviously, and they're going to start putting every other layer of tariff in, and it's going to be much harder to keep track of.
But we should note there's no procedure in place right now for businesses to claim refunds. The court just did not go there, and it in theory could be a long, prolonged legal fight that could take years, Ryan, right? Why are you confident?
It could take years. That's true. I'm pretty confident because in the court case itself, the government, the Department of Justice, filed a motion with the court that said if they lose the case if the plaintiff prevails, there will be refunds. So to me, yes, it's going to go back to court, but I just read that document and think it's a slam dunk. So I don't know for sure. We don't know. On the other hand, you have the way that the customs law is structured is that you have 480 days from the date of a customs entry to file a protest. And if you don't file those protests by that deadline, and so April 2nd, add 480 days, you get to, I believe it's July 17th of this year, that you're going to have to start, if you don't file these protests, you will miss the window. And so that's why we want to start enrolling people now. Like, let us help you file these protests. Make sure that you don't, because if you don't file the protest, it's over. And the only way to get it back after that is a lawsuit. Much more expensive. The protest we can just file for you. So that
by saying that this was going to happen if they lost, as you said, Evercore had a report out over the weekend where they argued probably 3 months to a year before refunds actually start to flow. Does that timeline make sense to you?
Could be, yeah. I'm not a lawyer, and lawyers always like to hedge their bets a little bit. And so I read the language, and it's a slam dunk. Others, smart people who are more trained in the law, say, well, this and that thing. But yeah, I'm more of that mind. It's like, I don't know how you win that lawsuit. If you said you told the court you would do this, and then it goes back to the court, and the judge looks at it, he's like, well, you told me this. So I think it's gonna be a tough one for the administration.
Yeah, I mean, there's a whole other can of worms, which is what about consumers? Illinois Governor Pritzker wants the Trump administration to pay every household in his state $1,700 each. So it's, again, who pays the tariffs, who gets the refunds. We'll continue the conversation, Ryan, but thank you very much for joining us on your calculator from Flexport.
Meantime, keeping an eye on the market for sure here, as we've not been able to repair any of the selling so far. 68.40. We mentioned the action in Amex, which is the biggest Dow laggard at the moment. Second is a Salesforce, David, which we're going to get earnings from later in the week.
Yeah, the IGV continues to be weak, down 4.5%. So that trade just continues in terms of those who are selling software overall as a result of the broad threat from AI.
But it's pretty broad on financials. Goldman's taking 200 points off the Dow, JP Morgan taking 82 points off the Dow. Between the financials, the software names, and then these discretionary names that I mentioned, particularly ones leveraged to the high end, that's where the selling is. Staples are holding up. Walmart's having another up day. Healthcare doing well too.
Still to come this morning, former Energy Secretary will weigh in on these U.S.-Iran tensions, with crude prices not quite back to the highs of last week when we got to 66.90, but pretty close. Stay with us.
Nice trade, Nkosi. Very nice trade, sir. Beautiful trade, sir. Beautiful trade. Alrighty, got the 11 o'clock candle upon us right now. The 11 o'clock candle is upon us. If this 11 o'clock 30-minute candle fails, then I'll get out.
Good Monday morning and welcome to Money Movers. I'm Sarah Eisen with Carl Quintanilla live from Post 9 of the New York Stock Exchange. Today, the return of tariff uncertainty for investors. The president saying he's raising global tariff rates to 15%. We're joined by one Wall Street veteran who says it should serve as a wake-up call to Congress.
Oil seeing its strongest start to the year since 22 on these simmering Iran-U.S. tensions. Top negotiators set to meet for some last-ditch talks in Geneva later this week. We're joined by former U.S. Energy Secretary Ernest Moniz this hour.
And President Trump with a warning for Netflix. Remove Susan Rice from its board or else. What the threat could mean for the fate of its Warner deal.
As for the markets, a bit of a sell-off today. Dow's down almost 700. We've lost 68.50 again today. There's some weakness in the banks. We mentioned Amex down almost 8%. Software not doing very well either, with the 10-year not moving too far from the initial 405 this morning. As for the winter storm, we continue to monitor travel disruptions. 50-mile-an-hour winds, more than 2 feet of snow in some places, canceling close to 20% of the more than 25,000 departing flights in the U.S. today. Nearly 25% of the more than 2,200 inbound flights from overseas also scrapped. That's according to data from Cirium. A live update from JFK is coming up later on this hour. Let's begin, though, with the ripple effect of Friday's SCOTUS decision.
With a tweet like that, you know the market going lower.
The difference between back from the government and what they paid, what they charge their consumers, does that become sort of politically unpopular? Do companies feel like they need to do something to help consumers in the interim, some kind of bonus, rebates, something? They may come under pressure to do that. But clearly, if the government taxed people and did it illegally, the government's going to have to give that tax money back to the people they collected it from.
Okay, Eamon, thank you very much. Eamon Javers in Washington. We'll turn to today's market action. All the major averages down more than 1% now. Joining us now is UBS Alignment Partners Managing Director Allie McCartney. Again, Allie, we have this day which can feel so brutal to the bulls, where you got the AI wrecking ball trade, and it's software. The worst performer right now in the S&P is CrowdStrike, and if you look at why, Anthropic released this Claude Code security over last week, and it's caused all sorts of anxiety that are serious overhangs on these stocks. What do you do?
LaGuardia.
So in addition to the noise that we're finding out of Washington, and noise that we actually expected in terms of the process of this, what we're seeing is the ultimate pendulum swing from last year. Last year was, can we get enough spend in order to create this creative destruction, profitability in the AI revolution? Now we sit in 2026, and the question has completely reversed, which is the sort of show me the money. How do you get to that with this level of spend? When you look specifically at software, first of all, understand, we heard from our PB desk today that they are off about 6 standard deviations in terms of ownership of software. While it is absolutely true that we are in this era of creative destruction around AI, what is also true is that we're not starting from zero. Any company that's starting from zero in terms of its sales management, its AI, its coding initiatives, well, then yes, they're going to go straight to AI and they're going to skip the software stack. But all of the other clients who have spent years and years devoted to and building proprietary protected information on that software stack are certainly going to have, at worst, a process to move to fully AI. And at best, there are going to be, the new companies of tomorrow. Said another way, if we look back 6 or 7 years now, retailers still exist post.com. Not all of them, and the model changed. And that's part of this digestion, which is both in a sense real and an opportunity.
So what do you clearly this has been a problem. It's been a theme in the market pretty much all year long, as you said. Do you think tariff uncertainty is part of the mix? Is it a reason to sell, or are you just an AI story here?
I think it's an incremental reason to be anxious, as is Iran, for example. But again, I think it's noise, right? Especially when I go to tariffs. The ultimate thing you do is you go to the fundamentals. Right now, we have consumer confidence and ISM manufacturing at relative highs. Why is that? It's the implications of the big, beautiful bill. It's a second year of 12 to 14% earnings growth. In a sense, although this is negative for the deficit, this is actually more of a fundamental and technical tailwind to to getting to those earnings numbers. So I think ultimately this year is going to be driven by the AI story. There will be winners and losers. We actually, as a result, last week took both IT and communication services down to neutral, which is a very contrarian position, given that IT, for example, has been the driver and has been positive returns 2 of 3 years over the last 20 years. But there is definitely an inflection point in market that is giving people pause.
Meantime, the Journal today with a tough take on Meta's balance sheet. There have been some in the market, alley, who argue that maybe the healthiest thing for tech would be for one hyperscaler to come out and say, you know what, guys, we're back to focusing on cash flow. Although at the moment, there's no sign that that's about to happen.
Ultimately, I think that the path forward and the steady state is going to involve use of cash flow, relationships and financing in the private markets between companies, and the public debt markets. There has yet to be any sort of technological revolution or major move forward where that wasn't the case. Because of the sort of moats of cash and positioning of the hyperscalers, or let's call it the AI 10, in terms of balance sheet relative defensiveness from cash flow, it's a conversation that is becoming uncomfortable to people. But given where rates are, given the health of corporate and individual balance sheets, given the state of regulation of reshoring, I'm not that worried about that over the long term. Obviously, we're all looking for excess. We're all pointing to examples of places where we think some people say it's inflationary, some people say it's disinflationary. But, I think, again, you have to look at the fundamental tailwinds. We have earnings growth. We have a very likely 2 interest rate decreases in the back half of the year. We have strong consumers. We have a positive fiscal and CapEx cycle, and there will continue to be noise. We are absolutely in sort of the young adult disruption phase of AI, but ultimately, I think years from now or even quarters from now, we're going to feel that this was, a really interesting opportunity to buy. Because again, if you think about it, if you look at the S&P overall, which is a tricky thing to do right now, but a way that many investors invest, multiples have not changed in the last 18 months. We've simply grown into earnings. So if ultimately there is a step function up because of AI, then that truly supports multiple growth in the future.
Okay, Allie McCartney with the case for the opportunities out there. Thank you for joining us.
Absolutely. Stay warm and safe.
On another day sort of dominated by AI disruption.
Yeah, indeed. When we return, can the U.S. and Iran find an off-ramp, or will we see strikes in the Middle East? What geopolitical tensions might mean for the markets?
Plus, we'll look at the potential impact on the energy sector in particular and the price of oil. Former Energy Secretary Ernie Moniz will join us. Don't go anywhere.
Try to make some sense of these heightened Iran tensions, as well as what the president's new tariff policy means for global markets. Let's bring in former Assistant Treasury Secretary and former Managing Director of the Institute of International Finance, Charles Dallara, now an advisory partner and chairman at Partners Group. Charles, great to have you back. Thanks for the time today.
Good to be with you again. Delighted to share views even on a complicated Monday morning.
It is a complicated day. We've been trying to keep track of the movement of assets through the Straits of Gibraltar and into the Middle East. What do you think it means regarding the president's calculus of how he can motivate Iran?
You know, it's interesting. It brings back memories. 5 decades ago, I was part of a movement on a guided missile destroyer as gunnery officer to go to the Eastern Mediterranean. It was what was called Black September, which was a time when the PLO tried to overthrow King Hussein. And I see the tensions again rising. It seems like tensions never abate in the Middle East. I believe we are at a critical moment here because obviously the strike that was executed very successfully by the U.S. this past summer has given the U.S. some confidence that it can strike Iran again. I think the risks are much higher this time, and I would hope that the president and his advisors would think very carefully about the downside risks before launching another strike. On the other hand, I don't see much prospect of agreement in the next round of talks in Geneva, to be quite honest with you. So I think the probability of a targeted strike is real.
What is the downside risk that you mentioned?
Oh, I think there are 2 things, 3 things really. One is loss of American lives. I think we've been very fortunate, very lucky in some ways, that in the first round of raids and in the actions in Venezuela where there was no loss of American lives. We can't count on this going forward. Evidence demonstrates to the contrary. Secondly, the risk of a wider Middle East conflict remains very real. Right now we have Hezbollah subdued, we have Hamas subdued. Do we really want to reignite tensions in the Middle East at this stage? I think this is a very real risk. And there's always the energy market, although that's not, to be honest, that's not the biggest concern at this point with regard to the risk.
I do wonder, though, about the energy market. I was going to ask you if you think that there's a big risk to oil prices, as there has been historically in the past with Iran. It doesn't feel like, you know, the supply equation is totally different this time around.
Well, it is, and therefore I don't see this being a grave risk, but I do think that the administration needs to be conscious of all of these risks. After all, we've got another war that'll be celebrating, tragically, a 4th anniversary tomorrow, I think it is, Sarah. And, you know, I think that we have enough conflicts underway in this world that we're struggling to resolve. And I would much rather see focus on bringing this serious Russian invasion of Ukraine to an end than I would see a special attack on Iran. I know their nuclear program is critical, and I fully understand the president's determination to try to bring enriched uranium processing to an end. But I do think we need to recognize that that regime change is exceptionally difficult. It may not lead us into a period of stability at all.
Charles, as for tariffs, Friday was really interesting. The concurring decision by Gorsuch was interesting, trying to get Congress light a fire under the Hill. I wonder whether or not you think Congress has an appetite to codify any of the things the president wants to do.
That is probably the critical question that I'm glad you focused on here today. I appreciate that the markets are trying to come to grips with critical issues like will companies and consumers get their money back, and will these tariffs be in place for an extended period of time past this 5-month period. But to me, one of the most interesting phenomenon here is that the Supreme Court has thrown the ball into the court of Congress. And it's now up to special committees such as House Ways and Means, Senate Finance, and others to initiate hearings on this issue, on these issues. And will they have the courage and the political will to do that as we are already into 8 months before the election? Or do they really want to postpone this another 5 months and consider the need to possibly legislate tariffs 3 months before the election? I don't think so. But I think the reality is that Congress cannot continue to shirk its responsibilities here. And the Supreme Court has given all of us a time, in my view, to step back and reflect. And while I appreciate the president's extreme displeasure at what happened on Friday with the Supreme Court, I think the reality is we're now learning that even though tariffs can be a useful instrument, they are not going to, broadly speaking, solve our trade problems without additional policy negotiations on other critical issues. And I think that we run some serious risk of relying too heavily on tariffs, which are politically costly, potentially, and economically damaging. We cannot expect large capital investments in the U.S. economy to be made when we continue to go through these periods of renewed uncertainty on tariffs.
Some have asked over the weekend what the intent of this new push is around Section 122, for example. It can't be about driving investment because, as you say, they expire without Congress. Journal today argues it hasn't moved the needle on any of this on trade deficits. Is it just about revenue, or is it just about having a cudgel he can use when he feels like it?
Well, I don't think it's so much about revenue. If it were about revenue, we would be developing a broader attack on these growing and unsustainable deficits, right? You cannot fill this deficit hole, which has been running unsustainably now for a number of years, just through tariffs alone. And so I think it's mostly about having an instrument that appears readily available. And I think that's part of the problem with tariffs. They appear readily available, but in reality, the Supreme Court has said, no, it's not really up to you to use an executive action. Now, there are, of course, exceptions to this, national security and the other provisions of our laws. But I was at the Treasury as a young Treasury officer when IEPA was passed, the legislation which was struck down here as a basis for these tariffs, and it was never intended to be used in this way. I think that it is time to step back and realize that if we want to deal with these unfair trade practices, that if we want to reduce the deficit sustainably over time, we're going to have to launch other negotiations with these countries. China is continuing to run a roughly 6% trade surplus. Germany still runs a roughly 5% trade surplus. Many of them are increasing in the face of these tariffs, increasing the subsidies. And intellectual property protection has continued to be a problem in China. I think we all know that. Talk to any businessman or businesswoman who's done business in China in the last 2 decades. I think these issues need to be the subject of intense negotiations, and I would love to see the administration launch those, somewhat as we did in 1985. During the Reagan administration as part of the Plaza Accord. Finally, I would add that currencies cannot be ignored here. If you look at the Chinese management of the renminbi, and I would even say the Japanese yen and the Korean won, they merit considerable scrutiny because depreciated currencies can give another country an artificial advantage. We know that, everyone knows that, and it needs to be studied carefully, potentially part of the solution to these trade problems.
Yeah, it definitely has Treasury's attention, that's for sure. Charles, we covered a lot of ground there. Look forward to having you back. Thanks.
Thanks a lot. Great to be with you.
Up next, thousands of flights canceled across the country as snow blankets the East Coast. A live report on where things stand from JFK Airport next.
Plus, what could Paramount Skydance do to end a bidding war with Netflix for WBD? Moffett Nathanson reveals the number they say could be a knockout punch. In a moment.
Alrighty, team. As you can see, I'm in another call. This one was more like it. The first one I just took just because it was an area. It wasn't a setup. So that's why I gave myself the much deserved slap. You know what I mean? So now we got a trade. It's right out of the playbook. 3-counter reversal. Call to the upside. First profit target area I'm seeking is 683.6. I got in at 681.4, seeking 683.6, and then possibly 685.8 area on this. Not calling for a reversal, just looking for a bounce up to a lower high. Probably won't be a reversal until there's some different news about these tariffs. But all the late bears who got to this party late, they are now having to take profit, which is why I'm not trying to turn this into a big trade. Just taking the profits as they present themselves, taking the money as it presents itself. Knowing that in order for the earlier bears to profit, they got to cash out. It's just that simple. You cannot go from diamond hands to real money without selling your position, closing your position. And for the bears, in order for them to close their position, they have to buy back into the market. And buying back into the market causes the market price to go higher. It is what it is. So I'm definitely a little bit more aggressive on this one.
Welcome back. Thousands of flights already canceled due to the winter storm. MS Now's Josh Einiger is at JFK Airport with the latest on those disruptions. I don't know, is anything going on there, Josh?
Well, we're here and it's windy, Sarah. I got that for you. Also, a lot of things going on, not perhaps in terms of flight activity, but behind me, we've been watching. I don't know if you can see behind me, there is a lot of work being done as grounds crews here try to stay ahead of this storm, but obviously it's an exercise in futility with all the blowing snow and a foot and a half of snow already on the ground here in New York. And we're still a couple of hours away from this storm finally moving out and giving them some chance to finally make some progress and get things back up and running. There are 4 runways here at Kennedy Airport. One of them, just one of them, is 12,000 feet long. That's 2.25 miles. They have to plow the runways. They have to plow the tarmac. There are planes here that have to be de-iced, and only then will they be able to start having airlines resume service. So, as you say, thousands of flights canceled. That's really just today. Most of the major airlines started canceling flights a couple of days ago to try to have their equipment in cities where they're not socked in, so they'll be able to get back up and running when the airports like Kennedy and LaGuardia and Logan and Boston are able once again to receive those flights. But obviously, the first thing that has to happen is this storm has to move out, and we're still several hours away from that. Sarah, Carl?
I know. I'm talking to people who are so stranded. Lucky them, stranded on vacation, but they can't get back for like a week because the flights are too full, even later in the weeks.
Yeah, look, I mean, they book these flights now, Sarah, obviously so full. That's how they operate these airlines. They've figured out how to maximize profit from these flights, and so as a result, there really isn't a lot of leeway when they cancel a flight. They just don't have seats. So, they don't have inventory in the system to be able to put people on the next flight. So in some cases, yeah, it takes days or even more than a week in some areas where you're stranded. Here at Kennedy Airport, there were some flights that were getting out last night. They were really operating way up until the very last moment when it would be safe to take off. But there were a few flights that we know of British Airways that had loaded the flights, they had de-iced, they had taxied out to the runway, I think 3 of them to London from here at Kennedy Airport. All of them canceled in the end. So those poor people, they don't have their bags. They're stuck inside the planes. It was deemed too unsafe in the windy conditions to remove the luggage from those flights. So they basically had to go find airport hotels with nothing but the shirts on their back, and that's going to be the case for them for a couple of days. It's rough. This is winter weather. It's a historic storm, and clearly the system is going to take some time to get back to normal, guys.
That's good color, Josh. Appreciate it very much. Josh Onigan over at JFK this morning. Let's get a news update as well with Contessa Brewer. Hey, Contessa.
Hey there, Carl. A federal judge today permanently blocked the Justice Department from releasing the prosecutor's report on that classified documents case against President Trump. Judge Eileen Cannon, a Trump appointee who oversaw the original case, said releasing this report would be what she called a manifest injustice to the president and his two associates who were also charged. She said because the case was dismissed and never, in fact, reached a jury. Nick Reiner is expected to enter a plea in a Los Angeles courtroom today. The son of Rob and Michelle Reiner faces murder charges in their stabbing deaths last year. Originally, he was scheduled to enter a plea last month, but agreed to a delay after his lawyer, Alan Jackson, withdrew from the case. Reiner is now represented by a public defender. And OpenAI announced a new push into consulting firms today with its enterprise platform called Frontier. The AI startup signed deals with Accenture, Boston Consulting Group, Capgemini, and McKinsey. Financial terms of this deal were not disclosed. Sarah, send it back to you. That's the news.
Yeah, cue the sell-off in the consulting firms, or I guess if they're private, hard to tell. Thank you, Contessa.
Sure.
Up next, how potential U.S. military action against Iran could impact global energy prices. Former Energy Secretary Ernie Moniz joins us on the show after a break. Welcome back. The U.S. and Iran expected to hold a third round of talks Thursday with the goal of reaching a nuclear deal. President Trump reportedly telling advisors that if diplomacy or any initial targeted attack doesn't lead to a deal, he will consider a much bigger attack in the coming months. Joining us now is former Energy Secretary Ernest Moniz, who is now co-chair of the Nuclear Threat Initiative. And we were just talking, Secretary Moniz, about whether the impact on the global energy market would be substantial this time around if we do see a bigger attack. How do you assess that risk?
Well, I think well, first of all, it's always dangerous to predict oil prices, but certainly today, structurally, the market is, if anything, oversupplied. So even with Iran's oil taken off the market, there shouldn't be a major move. On the other hand, these kinds of tensions always do lead to spikes. Frankly, you just showed on your screen the Brent oil price now over $70. There's probably already a bit of a premium there. So I would expect some volatility if the military actions are threatened and or executed. But of course, the huge risk would be if the Strait of Hormuz were actually blocked for any appreciable time. 20+% of the world's oil use goes through that waterway. And so that's the real big wild card here. And certainly if that were closed, I think you would see probably a very, very large spike until that strait was cleared.
I mean, there are sanctions on Iranian oil, aren't there? I don't know how strongly they're being enforced, but
yes.
How big of a producer is Iran at this point?
Well, Iran is producing a few million barrels, but the big issue is China is their big customer, 1.3 to 1.5 million barrels a day. China, of course, also has been building up its petroleum reserve, 400 million barrels probably. So again, structure.
team, my screen is frozen. All right, there we go. She just came back.